In today's video, I'm going to teach you Xero, how to record the loan on car purchase, 5 minutes. We're going to record a vehicle purchase that's funded by a loan, so your books show both the asset you own and the liability you owe. Start by logging into Xero. From the main menu, head to Purchases, then open Bills. Create a new bill. Use the dealer as the contact and enter the car's full purchase price as the bill total. This is important. Even if the bank is financing it, the bill represents the total cost of the car and what you owe to the dealer before the loan steps in. On the bill line, select an asset account for the vehicle, not an expense. If you don't already have a suitable fixed asset account, you can create one later, but most charts include something like motor vehicles or plant and equipment. Add a clear description and make sure the bill date matches the purchase date. Apply the correct tax treatment. If your business can claim GST or VAT on vehicles, choose the applicable tax rate on the line item. If not, select a no tax option. Double check your local rules here because the tax treatment for passenger vehicles can be specific. Save the bill. At this point, you've captured the total cost of the car as an asset, and the bill sits as a payable to the dealer. Next, open accounting, go to chart of accounts, and add a new account for the loan. Choose liability as the type. Give it a clear name like car loan and set it as a current or non-current liability based on how long the loan runs. Most car loans are non-current with a current portion. Make sure to enable payments to this account so you can use it as the source when paying the bill. Now return to bills and open the dealer bill you just created. Click Pay Bill. When Xero asks where the money is coming from, select the loan liability account you set up, enter the payment date to match when the loan was drawn down, approve the payment. By doing this, you've recorded the car as a fixed asset and at the same time created the loan balance you owe. Your accounts payable to the dealer is cleared by the funds coming from the loan account, not your bank. From here, your ongoing bank repayments will reduce the loan and record interest expense as you allocate them, which you can handle in bank reconciliation. Finally, review your balance sheet to confirm the vehicle appears under assets and the loan under liabilities, and set up depreciation for the vehicle separately in Xero's fixed assets if required.